Just by way of introduction to myself, I am, as Jeff mentioned, the fund manager of Metta Capital. It's South Africa's first Section 12J portfolio of funds offering our diversified product into a diversified portfolio of fund managers, diversified through sector and through fund vintage. And this is our fourth iteration in the Metta Capital High Income Fund. And it's a pleasure to go through it with you. And I look forward to the Q&A and interactive session at the end. So to kind of explain the value proposition and Metta Capital's vision is really in facilitating the next wave of capital into Section 12J. We've seen tremendous growth within the asset class, both not only in AUM but also in the number of participants that exist to date. With now 180 Section 12J vehicles and just under 10 billion rand raised, Metta Capital in 2017 saw the need for an aggregator within the industry to bring forward what has been very, very popular in traditional asset classes such as unit trusts, ETFs, is an investment team that can compile and weight a model portfolio for investors, specifically new Section 12J investors, to enter the Section 12J asset class, to facilitate larger asset managers through a professional product platform that they can utilize when advertising to their clients. And that has seen us win the business of Standard Bank Wealth and Investments and various other Tier 1 wealth managers as we look to bring forward Section 12J to their esteemed client base. Metta Capital really value proposition sits between the pre-investment stage as well as the post-investment stage. And in the pre-investment stage, we conduct a strenuous investment process every year. This, again, our fourth investment process to build this particular fund, where we model and weight a portfolio according to strict investment mandate. We then allow investors, for a minimum in this particular fund of 350,000 Rand, access to a diverse portfolio of funds. Again, removing a key barrier within the space being high minimums and an unaffordable diversity that used to exist prior to Metta Capital. Post-investment side, we offer a sophisticated market-leading reporting function where we have quarterly statements that go through to our investors. These statements contain personalized NAV statements, cash activity statements, and individual newsletters on each fund. So that an investor can walk with us throughout the investment term, looking at each individual fund individually, so that they can make better in 12-year decisions going forward as they choose this asset class, a part of their tax planning every year. And fourthly, the post-investment side, the ability to have a very sophisticated and well-versed board of directors to manage the portfolio on a quarterly basis, to review it, to monitor compliance, again, provides that gravitas to investors that they have entered a very sophisticated product that is well run by a knowledge investment team. And I think that's really the value proposition summed up in the pre-investment, post-investment stage. Looking into our investor experience, again, it centers around our sophisticated reporting. As an investor, you always know where your investments stand. You know exactly where your cash activity statements are. You know which dividends have been paid from which funds. And that allows you to walk the journey with us. And very importantly, as I mentioned, allows you to make better Section 12J decisions going forward. Metta Capital really was designed to be the first 12J investment to cater for the first-time 12J investor. And our reporting goes a long way in helping you understand the asset class. To go to our team and the gravitas behind who selects the portfolio, it's headed by Dr. Adrian Saville, who is the CEO and chairman of Cannon Asset Managers. Mark Teke sits as our chairman of our board and a member of our investment committee, former president of the Chamber of Mines and current CEO of Sereti Resources. Nick Dennis, the former CEO of Tiger Brands, adds a huge dynamic option to the team. And then Doug Smollen, the former chairman of the Smollen Group, adds a very versatile and rounded team to our investment team. And these are the individuals responsible for compiling and weighting our portfolio, as well as monitoring that portfolio throughout the investment term. To move into how we built Metta Capital High Income Fund through a 4-stage process, we took the entire Section 12J listing as we have done in our 3 previous investment processes. We filtered that listing down through very strict investment metrics, building a portfolio to our investment mandate. This particular mandate, the High Income Fund, had a very high weighting towards dividend yielding strategies, and I'll talk a bit about that when I introduce you to the portfolio. But the process really takes 3 to 4 months as we started anew every year to cater for new participants within the space. And following this process, we then get to our portfolio, which consists of 5 VCCs that you as an investor have access to. The weighting and composition of these VCCs are shown in front of you below. We have 2 of our highest weightings to Nessa Capital and Gaia. Nessa is a renewable energy player within the corporate and industrial space. Gaia operates within the infrastructure and agriculture space, born from a large private equity fund of AUM of just under 3 billion rand. Sunstone Capital within our movable asset space, which you'll hear about later on. Decentral Energy, again, another renewable energy player in the corporate industrial space. And then Optimize, a mezzanine finance play within hospitality. The sectoral diversity here is really weighted towards high income yielding strategies. It's based on funds that have a 3 to 4 year track record that we've monitored throughout our investment processes. And I think for one of the first times in our process, we've selected a fund that certainly has been backed up by past performance. Our anticipated return profile, which I'll introduce, is based on the achievements that these funds have made in the last 3 years. And on average annualized basis, an investor can look forward to 8% dividend yields throughout their 5 years. That really is the epitome of this product. It's designed to fill a huge gap in the investment space at the moment, with very low interest rates, very low dividends being paid by the listed entities. There is certainly a huge search for income and yield within the entire investment industry, and this particular product looks to provide that, as well as obviously the tax wrapper that comes with Section 12J. Importantly, looking at this fund, we have just under a 19% IRR. We have biannual dividends paid every 6 months on a regular basis. Because the investments have a very stable investment return profile, most importantly earned on the back of asset underpins that have very, very liquid properties within an established market. It has a very strong pathway to liquidity, which we can provide investors day one of year 6. Looking at individual and also to a corporate taxpayer, that has really been a big uptick we've seen in the recent capital raises, where corporates are getting involved, again in a search for yield, in a search for better tax planning. Corporates can invest up to 5 million, and we have a very, very strong income yield for those particular investors. Again, dividends not tax on dividend withholding tax to corporates as well, which is a nice benefit. Moving into where we've positioned our product, looking at the retirement annuity space, certainly at the 350,000 Rand minimum, it's a direct competition now. We feel as the asset class has matured to a 10 billion Rand asset class, we've lowered our minimum to be one of the most accessible and most comprehensive Section 12J investment vehicles in the market to date. If you look at some of the key benefits from 12J to RAs, it certainly is time for discussion around this particular alternative to the traditional investments that clients have made. When we discuss specifically with Standard Bank Wealth and Investment, this is quite an exciting area. They're looking to offer their affluent and high net worth clients. And again, this is something that is accessible to every single South African taxpayer from here on. To move into our fees, very importantly, Metta Capital does not charge any additional fees. Basically, in summary, if you were to invest into the underlying 5 funds directly or through our portfolio platform, the expense costs will be identical. We are aligned with investors in terms of our fee sharing agreements we have with the underlying funds. Therefore, for us to achieve optimal performance, we need those funds to perform and our portfolio to perform above those specific hurdles. And again, that aligns us with our investors very importantly, and it allows investors to feel comfortable that Metta Capital has their own skin in the game and their own equity and carry within the portfolio's success. So in summary, to kind of go through Metta Capital's value proposition, it is ideal for the first time Section 12J investor. It's got the gravitas of a strong investment team. It's well supported across some of the tier 1 wealth platforms around the country. And importantly, it's a very, very user-friendly application process. It's a single application process where you mandate ourselves to collate all your supporting documents for you. We then go forward and vote on your behalf at AGMs. We support your investment, and very importantly, we report on it on a regular basis each quarter to yourselves. So you have an individualized voice where we can go and communicate to the underlying funds, inform them of your desire to exit come the end of your investment term. And for the first time Section 12J investor, this really is the most comprehensive investment proposition. Thank you.
So, Darren, thank you. So that's a very compelling story that you have. As I understand it, you've been in the market for 4 years. One of the questions that we have over here is, can you just tell us the returns that you have been receiving from your portfolios over the last 4 years?
Sure, absolutely. We have had really, really strong returns, specifically in our last 2 portfolios, where we've really taken a strong decision as a team and investment committee to weight portfolios to higher dividend yielding strategies. And this is not to negate the sectors of the market that are more high risk, more high yielding in terms of capital appreciation, but we've found that the market currently sits best and performs best within these particular asset underpinned strategies, and we are achieving quite a strong yield within our third portfolio, which is our latest portfolio. Despite a very, very tough year in the pandemic, it looks to achieve close to a 5% yield, which is very, very strong in the first year as you consider the cash lag and deployment lag, as well as just the COVID implications. So it's demonstrating to investors a very strong uncorrelation benefit that they can obtain through Section 12J. And in a search for yield in this environment, we have a track record of performing as such.
Okay, great. I have a question here that says, how quickly does the underlying Section 12J funds in Metta deploy the capital, given their infrastructure sector exposure, that capital can be intensive and take some time?
Sure. So, one of the big investment selection criteria before a fund is even included within our portfolio is their ability to deploy. And it's something that we look at on a track record basis, and it's something that we are very, very adamant about, specifically in a low interest rate environment where your cash drag for undeployed capital will negate returns. So within our entities, we generally have a deployment cycle of between 3 to 6 months and possibly going to 8 months for some of your infrastructure, your property-backed assets, which might require a developmental period. But 3 to 6 months is crucial, specifically in our high income fund, to mitigate the cash drag that is felt by undeployed capital.
Okay, great. So thank you, Darren. Thank you. Good luck for your capital raise. I know this is your 4th capital raise. You've been successful to date. There's no reason why you won't be attracting even more capital this year with your performance to date. So best of luck, and look forward to your success.
Thank you, Jeff. Thank you. Thank you, everyone.